Good morning, good afternoon, and good evening, one and all. This is Rustin Edwards live from Geneva, followed with my illustrious co-host, Mr. Matt Stanley in Dubai, and welcome to the fifth season of The Smoking Barrel. How you doing?
Decent.
Happy New Year.
Happy New Year, mate. Yeah, geez, I forgot how to even record this thing. It's been a while, isn't it? No.
Yeah, the
Um,
holiday season tends to do that.
yes, it
Um,
does. Yeah. I hope
First
everyone
off,
had yeah. I hope everyone had a very nice Christmas period. I know I did. Um, yeah, I'm pleased that it's not you can't see me from trousers down. That's don't mean that in a weird way. I'm just saying like it's been an indulgent time of year, but it's been very nice. Time at home with the family and parents were here. I played a bit of golf and yeah, New Year's was nice. And then 2025, I dread to say it, our birthday's on Sunday, Rustin.
that it
Um,
is.
I'm the
That it is.
I'm gonna be the wrong side of mid 40s.
That's right. I'm still on the right side of 60, so that's okay.
Well, I mean, this okay. Every cloud. Anyway, Happy New Year. Hope everyone had a good one. The year of the snake. I wrote in my
The year of
commentary
the
this
snake,
morning. Yeah, not but enough about Donald Trump. Sorry, that was
Trumpus anus, or anus, no.
well, yeah, quite over 2 weeks until his inauguration, his second one. But yeah, look, 2025, 2024, a shit year for many. Let's not mess around there. Some, what's happening with conflicts across the world. I don't need to name them, but you'll know. But let's just hope that 2025 is the year of the resolution. I highly doubt it, unfortunately, if I've got a sensible hat on, but I hope everyone has a better year. I think 2024, it was an okay year. Like it was all right. I think people have just sort of kept their heads above water, and I think there's a bit more optimism at the start of the year. What do you reckon, Edwards?
Well, I don't know if I'd call it optimism. I think it's more fear factor than anything else. You have a lot of things in the market that people are weary about, and people also big on the hope. So right now, if you're an oil bull, you've probably thrown your hat into the potential Chinese demand due to stimulus increases. You're also probably watching the EU and the USA to see what type of sanctions they throw on Russian tankers or tankers that
Yeah,
are moving Russian oil.
yeah,
So oil bulls are in the hopeful play, and you can see that in how market structure has rallied from where it was before we talked last time, from a
yeah,
dollar 20 all the way up to about 4.30 here this morning on the Jan curve. So
yeah.
traders are putting their risk on premium in hopes that there'll be some more upsets in the oil flows going forward.
Yeah, look,
And I think
just to the uninitiated, that Jan, so people don't think that we're going mad in our, well, you're nearly 60. You're wrong. So right side of 60, sorry. The Jan 25, where we are now, to Jan 26 and next year. I know we're not really wishing the year away, but those two posts or those 2 months, they kind of wrap up in one spread. What the difference is between now and next year. And it's about $4.30 backward, which implies a pretty strong curve throughout the course of the year. It was a lot lower than that. Yeah. Sorry.
it's a hugely strong curve. I mean, that's actually up to the upper extremis of where backwardation usually goes
Yeah.
on crude oil markets.
Yeah. And I think, even compared to a month ago, I think people are pricing in whether, look, I mean, there's a load of things to discuss, and we just sort of keep it in some kind of semblance if we can on this body. Um, you know, OPEC, curtailment, keeping oil off the market. I think that's probably the biggest catalyst to the strength in the curve. But $4.30, pretty strong. The Chinese look. Let's do a couple of things. 2024. If you're an OPEC member, you look back on it now. You're in the rearview mirror. 2024. Sum up the year, like in a couple of sentences. A good year, bad year, like mission accomplished. How do you think it sits in Vienna?
I think OPEC's got to be pleased with what they have accomplished, more than not pleased, because at least they kept oil above 70.
Yeah,
And I think that if anything, that was the goal that they accomplished. Slow rolling, returning oil to the market has been what they've been doing. You
yeah.
know, Despite what their analysts put out on their monthly reports, I think they all saw the writing on the wall that oil demand is coming off and not going to recover anytime soon,
Yeah.
and that the market is a wash in product and a wash in oil. Now, the structure doesn't indicate that, but again, I think the structure is more of a risk on mindset that you see from traders coming in after being out over the holiday season, saying, oh, Donald Trump's going to come in, they're going to throw more sanctions on Russian oil, more sanctions on Iranian oil. China is going to do some more stimulus, therefore demand is going to go up, supply is going to be curtailed, and yeah, we have to have big backwardation.
Yeah.
So I think it's all positioning on a hope trade that things will fall in place along those lines. Now, I think Russian supply curtailment due to sanctions may be a bit overdone because if you're already involved in that trade and you're already violating the rules of the price cap, and they say, okay, we're going to sanction you now, are you really going to stop trading that oil? Are you really going to stop transporting that oil? Because I think instead of the trader, they're going to be going after the transporting entities.
Mm.
And if you look at some of the company structures of some of these dark fleet operators, trying to figure out exactly who is the UBO and what jurisdiction they sit in, it's amazing how they have channeled these flag states and these companies through different entities around the world to
Yeah.
hide who's doing what.
I mean, you could use Kepler's risk and compliance tool, which would go do that job for you.
Oh, there's a plug.
No, 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 it wasn't. No, look, we've all got targets. Let's get them out of the way in the first week of January. No, I'm joking. No, look, I think you're right. I mean, look, just going back to the OPEC, looking it through the optics of OPEC, right? When you think about, and I don't want to put hyperbole around, the gravity of certain situations the world was faced with last year. But really, if you're looking back now, rather than diving into Google and thinking what happened in March, what happened in April, I think we hit a high of about 92 in Brent in around April time when the Bab al-Mandeb issue was really starting to, the screw was really turning. Israel were really ramping up attacks on in Gaza, targeting Hamas. And then you had obviously the Ukrainian-Russian issue. You had other geopolitical factors that were coming into play. $92 the high. And I think when we were you weren't there, so with APEC in Singapore, I think was the low of the year, just about high 60s, about $68 a barrel. So when you think about all the tensions that were going on, and I'm not dismissing them at all, but you think largely when it comes to, oh my God, look at that, oil's gone mad, and oh my God, oil's low. OPEC were remarkably calm in terms of reacting last year. There wasn't the usual sort of knee-jerk ministers on Twitter, Reuters bullet points coming out that we're used to seeing. It seemed like there was a lot more sort of there was a lot more of a cushion, and the group sort of didn't react how they previously had done. And I think, what did that result in? Really, arguably, a pretty narrow trading range for most of the year when it came to the Brent futures market. I mean, what do you think? Are OPEC calming down? Is the OPEC Plus alliance is that a
I
bit more
think
stretched or what?
there were still some very good strategic tweets by the Saudi oil minister at certain points when crude was making big moves lower about, oh, we can always look at supply going forward and we always look at forward demand. And, we're there to manage the market.
Yeah.
And with those types of quotes, it wasn't like, oh my God, let's have a meeting, but it was basically they're using social media more effectively than they have in the past
Okay.
because it is using targeted messaging at certain points, which flips the market around because a lot of your AI assisted trading takes that headline, says, oh, there's going to be a move by Saudi Arabia, buy it up and support the market.
Yeah.
So I think they've become very savvy, probably on the use of the social media to maintain a bullish bias in the marketplace, despite the fundamentals not being there to support that bullish
Okay.
bias.
Okay. Interesting. Right. Okay. That's because a few people are asking me about AI. Unfortunately, last year, I'm pretty sure it was one of the words added to the English dictionary. If it wasn't in there before, was all people talked about was AI, Chat GPT. Obviously, NVIDIA, what's happening with with the parts they make, the chips, whatever, they make. Um, are we saying that the market witnessed less headline reactive trading than ever before last year?
Oh, no, 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 no. I would not say it at all. I said it was very headline reactive. I mean,
Would you?
if you look at the annual price chart on a day-to-day basis, It's like the heartbeat monitor of a marathon runner.
Yeah, but yeah, I know, but I mean, I was listening to something this morning. Donald Trump. I know we're not sure yet, and he's been very calm, very quiet. He's probably been enjoying his Florida golf courses until he has to start working again properly. But um, he has been remarkably quiet as well. The days when you go to sleep thinking everything's nice and calm, I'm pretty comfortable in my position, I'm going to go to sleep nicely, and then you wake up in the morning and go, oh my God, what's he done now? Send some mad tweet out or whatever it be. We haven't seen that. Do you think that's something that his administration behind him have sort of said, calm down on that, Donny boy, just relax, don't get on your phone after you've had a couple of jacks or whatever it might be, or whatever he's done, or is it, because OPEC largely, I know they've been reactive, they have to be, but it doesn't seem like the narrative is as aggressive on strong market movements as it was. And Donald, the same. I mean, I don't know. What do you think?
Well, I think Donald has gotten a bit more disciplined in what he puts out, but he's still putting out enough to keep people on their toes about what's he going to say next. Um, the benefit that he has going into this year versus his last presidency was that he has a higher majority. I mean, he walks in with a very large electoral college margin versus last time it was a very tight electoral
Yeah.
college, and he
Yeah.
lost the popular vote. So it is a different set of circumstances with him coming in this time versus his last time. So maybe he has mellowed a bit. He's got Elon Musk doing a lot of funky stuff as part of his transition team.
I'm not
Uh,
sure.
and so
I'm
maybe
not
maybe
sure if
he's
that's. I'm not sure if that's better or if that's like fat to fire. I don't know. I mean, I've kind of missed going. Oh God, like I said before last year on the podcast. At least these guys make politics seem achievable for the every man, but and every woman. But yeah, yeah, I don't know. I mean, looking back 2024, like I've just asked you about OPEC, and I know I'm putting you on the spot. 2025, is it really, you know, is it really going to be, forget OPEC, but in general, is it really going to be that the people are going to be every market participant in every market, whether you sell confectionery or lawnmowers, that everyone's going to be watching what Donald does? Donald does what he does everything to the market, and he could. I mean, has he got
I
that
mean,
much sway? Do you think?
the U.S. economy is a big economy, and the president, as the leader of the executive branch of the government, does have a lot of power of what he can do to influence the economy. So yes, he could readily release all the offshore. So as a case in point, President Biden had signed a executive order last week to ban more real estate offshore from exploration.
Yeah,
Trump can come in and say, nope, we're going to lift that ban. Come drill.
which he probably will.
Yeah. So that's right there is something that he can do that readily impacts the market because now he opens up more land. He can open up federal lands on
Yeah, but hang on,
shore.
hang on. Sorry. Did the market react when that Biden news came out about the executive order last week?
No, I don't think it did. Again, I think the market's more reactive to the possibility of higher sanctions right now than it is on anything else that the president's doing.
Okay,
Biden has curtailed a lot of fossil fuel development in the United States through executive action,
right.
and Trump can reverse all that.
Yeah, but hang on.
And
In a deregulated market like upstream US oil production is, it's not like a government policy, OPEC policy, where they're like, we are going to do this, we are going to do that. The only thing that Trump, when he talks about drill, baby, drill, we're going to drill all this oil, man, and Bobby's going to keep his eyes out of it and blah, blah, blah. Well, that's not his decision. But what he can do is he can incentivize the private companies who do drill for oil, like the new energy secretary who's coming in, who's the CEO of Liberty Energy and Devon and Continental and all these guys. If bureaucracy is broken down, which Musk is trying to do, and there's enough incentives for the US oil producer to drill more, that's all he can do. He can't tell them what to do, but he can incentivize them, right?
we can incentivize by changing the environment in which they operate in. Now, as a corporation, that's not really a good thing because You set up your operation based on the regulatory framework in which you operate in. And if every 4 years you have a different president who comes in who changes that framework, you really can't make a long-term investment anywhere because you don't know if in 4 years somebody's going to say, nope, forget that. That's now illegal. You can't do that anymore.
Right.
So if I'm an offshore producer who wins a lease on federal land under a Trump administration, and then a new president comes in who says, nope, stop that. We're not going to allow you to drill there. Then it's a bit of how can you actually run a company if you have that type of big swing in the environmental control or the regulatory controls?
Right. Okay. So what US oil production now is around what? I think 13.6 million barrels a day.
Yeah,
We
13.6. Yeah.
Yeah, we see that old Matt Smith, my guy in the US, who's great. He sees that plateauing at the sort of by Q4, maybe 13.7, something like that. But largely, I mean, the drill baby drill narrative, is that just a sort of smokescreen?
Well, it's not because what is impacting oil production in the US is not so much drilling, it's getting rid of the nat gas because a
Okay.
lot of the shale oil has a lot of associated NGL and a lot of nat gas that comes out of those wells. And if you don't have the export capacity to get it out to other markets, because the US market is fairly saturated on that gas,
Okay.
then you really can't produce more oil because then you
I see.
start
So
flaring,
what gas
which is
gas
against the
exports
law.
will be incentivized.
So that's what I think. That's what I think Trump is going to be, and he's already intimated that to Europe, saying, "Well, hey, you're shutting off Russian flow as of January 1. We've got plenty of gas here in the U.S. Come buy our gas."
Yeah, it's funny because the guys, I was on with the guys at Dubai Eye here just before Christmas, and that was one of the main talking points. The EU, in their infinite wisdom, have told Qatar that they've got to pick up your ESG, your environmental, social governance rules, etc., to meet with our standards, or we're going to charge you. We're going to apply a 5% tax on if we import your gas.
Oh
And
no no
Qatar,
no 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 no! It's a 5% tax on global revenues, and that's not just for Qatar. That's for any company doing business in the EU.
Okay, fine. So, I mean, what's the objective there? I'm not so sure. But essentially, if you're, where is the EU getting their gas from right now? 50% comes from the US. Around 20% comes from Qatar. So the reason I asked my opinion is because Qatar, obviously, being GCC core, being Middle East gas producer, are they going to send so much gas from the Middle East into Europe? You'd argue no, because it comes straight out the people's pockets, and Qataris, I mean, because it's essentially a tax or a tariff. It's not a tariff, but it's essentially a fee just to ensure that ESG is more important than energy security. But I mean, that only plays into the hands then of the US.
Yes, it does.
Nice.
I mean, so basically, what you'd probably see is you'd see, and the thing is that that ESG rule was a rule that was passed, I think, back in 2007. And this is, I think, probably one of the overarching risks of European business going into the next 5 years is that there are a lot of rules and regulations that were passed in 2000, 2005, 2007, which start becoming reality in 2025 and on.
I love the irony that Elon Musk is currently in Europe, probably promoting Make America Great Again. And it would be a bureaucratic decision by the EU as the reason why he could sell more gas into EU. So bureaucracy, which he's trying to break down in the US, in the government, a bureaucratic decision like what's going on within the EU actually helps him in this regard.
Well, it helps the US find markets for the gas,
Yeah,
yes.
exactly. Yeah. Amazing. Amazing. Oh, politics, how we love you. But no, look, I mean, that's it. I mean, we covered a few things there. OPEC, obviously, pretty good year, 2024, largely stable, even with some fairly grave situations when it comes to geopolitics, especially in the Middle East, and are still ongoing, by the way. 2025, OPEC, largely same again, please, rinse and repeat.
Yeah, I think these production cuts just get kicked all the way down to the end of the year.
Yeah.
I don't think they bring any oil.
I think the only it's going to be a tough one, isn't it? Because I think the one thing that people are pricing in, or the one, the first move that Trump will make will be a tightening of enforcement of sanctions on people like Russia and Iran, especially. I mean, we actually think by the summer that further tightening of sanctions from the new Trump administration will keep off around another 500,000 barrels a day of Iranian oil that's sort of leaking into the market. Then you've got
Well,
Venezuela as well.
Iran and Venezuela, both
Yeah.
those countries get sanctioned or have an increase in sanction pressure from the Trump administration.
Yeah, I mean, again, this opens up the door for market share to be grabbed by a US participant. I mean, it's a business. He's running a business. We, Iran, wherever you want to sit on a political compass about the right or wrongs about sanctions enforcement or why they're there in the first place with Russia, Venezuela, and Iran is irrelevant. But they are sanctioned by the US and by OFAC, and largely Russia by everywhere else as well, really, in the Western world. But essentially, a drill baby drill agenda, if sanctions are tightened further, which they will be, plays into the hands of the US oil producer as well, like you said. So it's kind of a win-win, isn't it, for them?
I mean, basically reduce supply to the market, you make clean supply available, and voila.
Yeah. Yeah, I mean, it's going to be interesting. I think the one thing that people need to factor in as well is, okay, yeah, there will be further tightening of sanctions, but I think it will be the reaction from other members of the GCC core as well. You know what Saudi's sort of the first olive branch to go out to Donald Trump about where that sits politically. Where does Trump and his administration sort of fit in about brokering a deal in Syria or Gaza or whatever may happen? I think that will. I'd imagine there will be a discussion there about about market share for the Saudis because they obviously want to increase. Vision 2030 isn't going to pay for itself. It's only 5 years away now. That's very much on the agenda for those giga projects. Got to be paid for somehow. And oil prices being the biggest contributor to GDP in Saudi are obviously a main factor of that. So I think that for me, after end of Q1, I reckon you'll start hearing rumblings. I reckon around IP week, IE week, whatever you want to call it, at the end of February. Can't believe I'm saying that, but yeah, we will see you there. Both Russ and I will be in London. I think that to me, what the Saudis do, the headlines you read coming out of the first meeting between MBS and Trump or whoever it may be, he's going to send from his administration. I think that to me is such an important factor coming in for the rest of the year, Saudi-US relations, and how much, if they come to some kind of agreement, if that has an effect on OPEC. I don't think it will, but Saudi being this sort of de facto OPEC leader, I think the first meeting between Saudi and the Trump administration is going to set a bellwether really for oil markets this year.
Well, if you think that Trump is going to revive the Abraham Accords that he was working on prior to
Yeah,
his departure from his last presidency, I think that is fully on the table. And I think if he can actually get that rapprochement done between Saudi and Israel, that's going to change the whole dynamic of the Middle East, especially with the hits that Iran has been taken over the last month, losing Syria potentially,
yeah,
Hamas being knocked out. Yemen is still a problem. The Houthis are still doing what they can do, but how long is that going to last um, before that gets knocked out? Who knows? But nevertheless, I think that's going to be a bellwether move if they can get the Abraham Accords restarted and get that rapprochement done between Saudi and Israel, which I think is a very plausible thing to happen.
yeah.
Then, we can see a different dynamic change in the Middle East and how that's all going to work. It's all going to work around security of supply and national security of the GCC countries.
Yeah, I mean, look, that's a good point because, why weren't, bearing in mind all the drama that's sort of going on in the background with these political tensions in the Middle East and where, other parts of the world as well. The reason we remain range bound is because energy security was never really at risk. It was the threat of a wider conflict that people were pricing in. War is premiums priced in, why we're up to the sort of high 70s October. We're there now, high since 14th of October. Brent trading at $76.12 a barrel right now, off 40 cents on the day. But, the highest it has been for a few weeks because of, like I said, optimism and hope. But just, there's we covered a lot of ground here. I feel like we've used up like 3 months worth of podcasts in one session. So we've done well here. Happy New Year. Just a quick one about what will happen. Deal brokered, Middle East, Houthis, Syria. Put your freight hat back on. Let's say, for example, a deal was reached, the Houthi rebels calmed down, down tools, downed arms, etc., and the Suez was free to pass again. Is that realistic to look at? Would the freight market, tanker owners sort of go, okay, the Suez is fine again. I can go through the Suez and that right route opens back up. Ton miles are down, freight weak, end user, blah, blah, blah. I mean, what's your view there?
Well, I think with or without these, I think freight's going to have a hard time on the tanker markets. My first thing is that if you look at Nigeria, you have Dangote, you have Port Harcourt, now you have the Warri refinery
Yeah,
running.
yeah,
And with Kaunda coming up apparently here in January as well, you almost have enough capacity online in Nigeria to take 100% of Nigerian production.
okay,
Bearing that in mind, that means you've got a Suezmax a day that's free if that
ouch.
happened. And that's a lot of tonnage that also becomes available to move things. So I think that in itself is bearish freight.
Okay,
And I think that's going to really be the story is how does West Africa play out in the global freight markets versus what happens in the Red Sea when it comes to tanker freight.
okay,
Tanker the Red Sea is probably going to be more impactful to those ships that are on the
okay.
container rates more than anything else, especially now that you have the Fuel EU maritime rule in effect as of January 1st,
Which
and you
is
have the
what?
increase.
Just remind us of that. What is that?
That is your greenhouse gas intensity on a ship bases your 2020 baseline of your emissions. And on top of that, you've got the EUAs going up to 70% of your consumption of your carbon emission. So having that longer trip around Africa all of a sudden becomes far more financially hurtful than taking a shorter route through the Red Sea.
Right.
So those things are going to be far more impactful to what happens with the Red Sea. So I think if the Red Sea does open up again, yeah, it's going to be very bearish freight overall, because as you said, ton miles will go down. On top of that, if you have the Nigerian refineries fully come back,
Yeah.
consuming Nigerian crudes, then that's going to reduce the amount of ships necessary to move the Nigerian production. And you're going to be awash in ships.
Yeah, you know what? I mean, just to save your blessed voice, bless you. He's fighting through people with his illness, but that's what we
I
do at the
heard you
Smoking
people
Barrel.
in here.
Exactly. No, I think just sort of close things out. First one of the year, first one for a while. I think that's a very good point and one that the market isn't looking at yet. I think of course, you go into the first trading day of the year. I know that things are open Thursday, Friday, but largely people were still hungover. But today is the first real trading day. Kids back at school. Yippee. Okay, optimism, Chinese demand, not enough oil. Okay, I'm going to buy the market, hence why we're at a 3 month high. When you look at the wood for the trees, the Nigeria story, I think, is a really good representation of what is happening fundamentally. This time last year, you and I were talking about Dangote. Will they, won't they? When are they going to start producing Europe grade gasoline and can start being self sustaining? Well, it's happening now, right? It's happening now. The Port Harcourt refinery producing. Worry, like you said, producing. That's only going to become, the system's going to become more and more efficient and runs would increase. And I think that Nigeria, for not just for freight, I think freight's a really good point, but for crude diffs in the Atlantic Basin, for gasoline cracks in Europe because that gasoline barrel will no longer be going from Europe into West Africa, or not as much of it. So that puts pressure on gasoline balances in Northwest Europe, puts pressure on the East-West because they're going to have to send it east, or maybe, maybe down to Latin America. And that becomes, there's a lot to dig into there. But I think if you really want to look at what is a big disruptor, forget China, what's going to happen there with incentives. I think that's it's like owning an iPad. It's nice to have, but you don't necessarily need one. China is still on an EV drive, and that's not going away anytime soon. I think Nigeria looking at as having a case study for what's going to disrupt balances this year and will affect markets behind the headlines. I think you're spot on. I think Nigeria and what's happening with the new refineries is the best place to start, and then you can dig deeper from there. But you'll have to tune into the smoking barrel later on in the year, won't you?
Yeah, I honestly think 2025 is going to be an Atlantic Basin story, and it's going to be more on demand destruction, i.e., with the new ECA zone coming into the Mediterranean in May 1st,
Yeah,
as well as capacity on straight run products, because the Port Harcourt, Wherry, and Kaduna refineries are not complex refining complexes. They are topping units for the better parts. That means there'll be more straight run naphtha, more straight run
yeah,
fuel oil being to the markets, which is going to impact a lot of that base commodity pricing, i.e., your fuel oil for bunkers and your naphtha for petchem demand. So I think 2025 is Atlantic Basin. And if you're looking at it from other markets, I mean, China, I think China is a red herring. I think with what they've done, what they continue to do to change their energy footprint, yes, they have energy demand. It's not necessarily oil demand. And that's the SWIFT that everybody lost last year. And that's not going to change next year, this year. They're going
yeah,
to continue transitioning their fleet to alternative fuels, which means just less and less demand for petroleum
yeah.
and more demand for other fuels, nat gas and electricity.
Yeah, I agree with you. I think as well the Atlantic Basin story as well. I think Mexico, what happens there, the Aleca refinery in Dos Bocas, I think that
Yep.
puts pressure on it as well. Venezuela,
And you
what
throw
happens? Look,
and you throw in a dash of Donald Trump saying "drill, baby, drill,"
yeah,
and boom, there you go.
well, a dash of Donald. I'm not sure he's ever dashed anyway, but I mean, one to watch, mate. But yeah, look, look, it's not all doom and gloom. There are pockets of demand that are creeping up. NAFTA had a good end to the year. LPG had a good end to the year. Plastic demand's increasing, but it's a difficult one. 2024, the market shrugged off quite a lot, and like you said, China especially. How much longer can that shrugging kind of go on? I think the shoulders are getting a bit sore, and I think there might be some acknowledgement. But look, it's a new year. Be optimistic. I am. I'm on the path to no bread, people, and it's a weird place, but we will see. But look, happy New Year to everyone. 2025, the year of the snake. And look, I hope to see a lot more of you. We will be putting out more content. Be some exciting new things that are coming up, and I just hope everyone has a really good New Year and a good year.
Christmas for all those celebrating Christmas today, because
Oh, yes.
it is Orthodox Christmas.
Yes, it is.
And yeah, I'm going to be investing heavily in honey pots to help feed all those bears who are nice and hungry and happy.
All right, mate. Good to see you.
Thank you all for joining us here at the Smoking Barrel. We look forward to talking to you again. Click, like, subscribe, and hope to see you in February at IP Week or IE
Ciao.
Week.
Indeed. Ciao.